Welcome, ladies and gentlemen, Mines and Money Resourcing Tomorrow 2023 here in London. And it's my honor and pleasure now to talk to Florian Grummes, the CEO and founder of the Midas Touch Consulting. We just have been together on a panel here about gold and silver. And of course, we want to take the opportunity to talk about it. Florian.
Hi, Johan. Thanks for having me.
Yeah, thanks for taking the time. We were just at this precious metal panel here together, and I think it's a great opportunity to talk to you as you are a technical specialist. So this monthly closing above 2,000, what does it trigger then in your technical analysis?
Yeah, I've been writing about it for quite some weeks now. Also did some presentations on it. Well, I think most of the trend following money basically will come into the gold market. We've seen 12 years consolidation, correction. Remember 2011 gold was trading at 1920. It took 10 years to get back to that number, and then a new all-time high which is still in place from summer 2020. Another 3 years consolidation. It's a large cup and handle pattern, nothing new. Everybody's watching it. And around the $2,000 level, gold has been struggling over the last 3 years again and again. No monthly close up until now. It takes one more day and we made it. And back in 2009, similar situation, $1,000 lower at $1,000, of course, as well as psychological level, magical number. And once gold finally cleared it, you saw it running higher 25% in the following 3 months without any bigger pullback or significant pullback. So I think a lot of money will come into the sector. I think everything fits together now. The fundamental data basically is screaming for a higher gold price for quite some time. We have massive central bank demand this year. You have most of the physical demand coming from the east, from Asia, from Shanghai, Mumbai and Dubai. That's basically the hubs for the gold price nowadays. It's not London and New York anymore. You see that the paper shenanigans in New York having a hard time to push gold prices lower. And there is a lot of uncertainty in the world. You have exponentially rising interest rates and US debts.
Refinancing is coming.
Yes, you had a banking run this year. You hear more troubles in the regional banking system in America. I think there's lots of reasons on the table. And technically speaking, it seems it's happening now.
I hope you're right. So $2,500 within the next, about 3 to 6 months?
Yeah, I would say until spring. Usually you have the seasonal pattern in gold. Mid-December until late February, March. That's usually a very strong period of time where not only gold is usually always going higher, also the mining stocks are doing really well in that time frame.
Okay, before we come to the mining stocks, I want to talk about the little brother, silver.
Yeah.
What's your view on that here technically?
Yeah, I mean, usually, first of all, silver most of the time follows gold. So it looks like it's breaking out of this triangle right now. So we have room until $30. I think that's the moderate kind of like price target. It's been a strong resistance, this $30 level, over the last 2.5 years. So maybe it fails there, but maybe this time there's enough gas in the tank to break through. And then, of course, we're talking $35, $40, $45. And I think even possible, very extreme bullish scenario, but maybe the market wants to see the $50 all-time high again after running so many times against the $30. Could be, that would be the best case scenario until spring.
Yeah, so pedal to the metal. Fantastic. We have also spoken about, let's say, investing in mining companies. What would you prefer by now? Where do you see, let's say, opportunities, value opportunities?
Yeah.
And what's your view on that?
Well, I think generally you will find a lot of value in the sector now. It's so beaten down. The desperation is rather very high. I would focus on the mid and smaller producers because with a rising gold price, they will have a massive increase on their margins, which would basically give you a lot of leverage on the balance sheet. And I think they should do really well. And within the cycle, if we are here starting a new cycle in the gold market or in precious metals in general, usually it's the big seniors and the mid and smaller seniors, smaller producers who run first. Then at some point you have the juniors and then you have the explorers and silver. So I would focus on the mid and smaller producer in gold.
Any names?
Yeah, it could be a Victoria Gold, for example, that I really like. I like Minera Alamos is a smaller one. Alamos Gold is very interesting. Karora Resources is an interesting name. Yeah, there is quite a few.
Okay, super. what other metals you would say could be interesting for the future? Anything you have in mind?
Well, for the future, there could be a lot of interesting things, but over the next 3 to 5 months, I focus on precious metals, gold and silver. I think there is still a high chance that we're going to see a hard landing or a crash landing in the next year in the general economy, and that will drag down most of the commodity prices as well. I think for the next few months, gold and silver, and then we have to see. I think the cards will be shuffled again over the next year, and then maybe or usually, I mean, if gold starts to run, it will trigger a rally in the commodity sector, generally speaking, at some point. So it could be that copper maybe is ripe then on a later stage, but for now, seeing into the next 6 months, I would focus on gold and silver.
So also you do not see for next year falling interest rates in the US?
I do. I think at some point they will have to cut rates, or the markets basically will force the Fed.
That would maybe help also.
Yes, but it's not something that happens immediately. I mean, maybe, who knows? This year we've seen on one weekend they turned around and printed 400 billion due to the bank run in America. So it's not necessarily that we're going to see a one-year bear market crash, liquidity crisis like in 2008. It could happen much faster. And within a few weeks, they drastically lower interest rates. Who knows? I don't know. But usually these turning points take more time. So I assume that once they start lowering rates, actually the markets, the stock markets will panic. And that would also probably be a little bit challenging for the commodities. So,
of course.
But down the road, of course, lower interest rates, let's say for a year from now, 1.5 years from now, yes.
Okay,
that would help copper.
But all in all, you are positive for the next 3 months.
I'm very positive on gold and silver for the next 3 to 5 months, yes.
Fantastic. Florian, thank you very much. All the best. Merry Christmas. And I hope you are right.
Merry Christmas to you and all the viewers. Thank
you very much. Yeah, ladies and gentlemen, that was Florian Grummes, the CEO of Midas Touch Consulting. And tomorrow is the date, 30th November. Above the $2,000 in his technical analysis, and then hopefully the 2,500 are really triggered for the next 3 to 5 months. Also, silver can go much higher, $35, $40 maybe in the pot here. And hope you are in. Have a look at those mid-sized producers, smaller producers, which are really well cashed up and which have a fantastic leverage on the higher gold prices. But also the bigger ones are fine because then dividends will rise. Thanks for watching us, and bye-bye aus London.
Thanks. Bye-bye.